The bell has rung on a session that gave traders serious whiplash. The S&P ASX 200 closed up 0.25% at 8,481.8 points. But that doesn't tell the whole story. We hit a terrifying low of 8,410 this morning before staging a 90-point rebound to hit a high of 8,549. The spark? Headlines that President Trump might be willing to wind down military operations in Iran even if the Strait of Hormuz stays restricted. It was enough to flip the script, but the momentum faded late in the afternoon as reality set back in. I'm Jay. Let's look at the damage and the dividends. In a complete reversal from yesterday, technology and mining were the surprise engines of today's rally. After being crushed all week, the tech sector saw a significant rebound. Zero led the charge, jumping 6.55%, while the big miners also caught a bid on the hope of a de-escalation. In this environment, it might be that traders are looking for any excuse to buy the dip in growth stocks. But with the April 6th deadline still looming, this feels like a very cautious bet. The biggest shift today was in the energy fortress. After weeks of vertical gains, the sector finally saw red. As Brent oil eased back from its US $116 high to around US $105, we saw immediate profit taking. Whitehaven coal dropped 6% to $9.25, and New Hope fell 2.3% to $5.87. Even Woodside finished slightly lower. It might be that the war premium is leaking out, or simply that the sector was overdue for a breather after a massive 18% run this month. The big four banks found buyers for most of the day, shrugging off the morning news that the RBA will ban card surcharges from October. However, that green glow faded late in the afternoon. CBA ended up 0.6% lower at $167.70, while Westpac and ANZ also saw their early gains trimmed. With the DXCIT strike officially active and the RBA warning of 5% inflation, the banking sector is struggling to find a clear direction in this turmoil. My fresh view? Today was a headline trade. The market jumped on the hope of a Trump-led exit strategy, but the physical reality hasn't changed. The fuel excise cut starts tomorrow. Rationing is still a level 2 threat, and gold is still holding firm near record highs. Northern Star still surged 4.5% to $20.40 today. When gold stays that strong during a relief rally, it tells me the big money is still incredibly nervous. Don't mistake a 10-day pause for a permanent peace. We are still in the eye of the storm. The 10-day clock is ticking, and while the screen was green today, the underlying tension is higher than ever. With the fuel excise cut starting tomorrow and the April 6th deadline looming, this is no time for complacency. Keep a close eye on the energy sector and those banking apps as the DXC strike escalates. Follow Oz Stock Watch for the data that actually moves the needle. Stay safe and stay disciplined. Trade Smart Australia.